From iAfrikan Media, this is iAfrikan BYTES, a podcast that features commentary on African news, insights, opinions, and analysis with tech industry leaders and professionals. The podcasts are from interviews conducted by the iAfrikan team, whether at events or when needed for commentary. I'm Bataun Khotokwane, host and editor-in-chief for iAfrikan.com, spelled www.iafrikan.com. With an increasing number of businesses and investors aiming to capitalize on Africa's untapped potential, what such company is Knife Capital, a venture capital firm first founded by Mark Shuttleworth as Here Be Dragon, and then later recapitalized and rebranded as Knife Capital. On this episode of iAfrikan BYTES, partner and co-founder of Knife Capital, Keet van Zyl, joins us to discuss the maturation of the VC landscape in South Africa and understand what are the metrics that VCs use when selecting startups to invest in. Southern African BYTES. Keet van Zyl, thank you so much for joining us on iAfrikan.com. Now, on your LinkedIn, quite fascinating actually, it says you're fascinated by bubbles and champagne and a passion for water skiing. Break that down. What does that mean?
Well, you can't just do boring venture capital stuff your whole life. You also have to celebrate and spend some quality time on things that you are passionate about.
Yes.
So yeah, champagne, it's actually not... It is the taste, but it's more the whole complexity in making champagne. The method, champenois, and the bubbles, and the compression, and the turning, and the disgorging, and it's no one ever has really a bad time drinking champagne because it's kind of associated with celebration.
Yes,
and I think I just like definitely. the complexity in that, and really took that on board into our company culture, etc. And then water skiing. I grew up in a place just south of Johannesburg called Vereniging, which is on the Vaal River. Uh-huh. And in those days, the Vaal River was still clean, and you could ski on it. So I basically grew up water skiing, and I think just it's for me, it's nice. Everyone is in the boat; they focused on the activity, and it's a nice fun thing to do. So I grew up with boats and water skiing, and just and got quite good at it over the years. And now my kids have overtaken me as the champions, but I love it.
Yeah, walking in daddy's footsteps. Exactly. It's beautiful. I mean, you shed a bit on, you come from Vereniging, the Vaal. Where did you study, and what were you doing before 2010, the birth of Knife Capital?
So after school, I decided to get quite far away from there, just to spread my wings a little bit, and studied in Stellenbosch University down in the Cape. Never been there before in my life, so it was quite actually daunting when I arrived. But obviously, quite quickly got into the swing of things. Studied accounting. Not really because I loved accounting. I think it was more just because it was one of the more difficult business degrees to get into. And, I guess ego took over, and I thought, well, I'm not going to do easy stuff in life, so let's go for it. Qualified as an accountant, but then also went on to study MBA. In later life, I got quite interested in intellectual property law, just in terms of, or some examples of some of our exits and this and that, and some issues we came across. So I studied IP law. So, but I often say, half jokingly and half serious, that I probably should have studied to be a good venture capitalist. Rather, I should have studied psychology and drama, just for how things work. But there I am, an emancipated accountant with some law and MBA thrown into it. But we also built our own business in the process.
Beautiful. Walk us through the investment philosophy of Knife Capital.
Well, Knife, we started really to continue our VC investments. Before Knife, I worked in a private equity fund investing in sub-Saharan Africa out of Johannesburg. Came down to Cape Town to work at Investec Bank with owner-managed businesses. So basically, with entrepreneurs, and then got an opportunity to join Mark Shuttleworth's Here Be Dragon's fund. And Mark was at that stage, and still one of our more successful tech entrepreneurs, if you don't count Elon Musk. He sold his business for quite a lot, and then invested behind early stage entrepreneurs. I joined them. And basically, from there, met my co-founder, Keet van Zyl, and we started Knife in 2010, taking over the management of HBD. So we approached Mark, and the philosophy has always been, just invest behind innovation-driven businesses with some traction. We are better at scaling businesses that already have a product market fit than we are at real idea phase, kind of MVP type stuff. And the philosophy is finding good investments, investors to invest behind you, making good investments through diligence, valuations, fair term sheets, etc., and then growing the business towards an exit. So that's the realization strategy. So the philosophy has always been, over the last 15 years since we started at HBD, has been that.
Keet, look at the early days. Where did this passion, when you met, Mark, where did this passion or belief in like technology and innovation and startups, especially specifically in the tech sector, where did that confidence come from?
To be honest, I don't think it was this epiphany of like, I want to add value to entrepreneurs. I just like the guts to glory stories of entrepreneurs. I think that as a South African that really wanted to stay in the country and make a difference, in retrospect, I really believe that entrepreneurs are the future, and on any metric, there's not enough jobs being created. Government is not spending enough money.
100%.
Corporates are downsizing. So the only way forward for an economy is entrepreneurs. And I really like that as a concept. And then also I had to find a career where I applied this emancipated accounting skills of mine. And I thought, well, venture capital is as good a place as any. And it is inspiring, and we get blown away on a weekly basis with the stories and the positive energy. So I wish everyone who's negative about South Africa, everyone who's negative about Africa, I wish they could spend a sort of month in our shoes and see the amazing entrepreneurs that we're getting in touch with, because that is just the positive stories, and it's based on a long, exciting future. It's not something that's a quick trade.
In fact, Keet, I'd add on to what you're saying, in the sense that we need to celebrate entrepreneurs more. I think we don't celebrate entrepreneurship enough. We don't put entrepreneurs on a pedestal and inspire sort of society in a different way, because like you said, the solutions to our problems are going to come from entrepreneurs. So definitely we share that sentiment with you. Okay, now let's look under the hood. In the 13 years you guys have been around, this is your third fund. How much money have you raised in total?
Yeah, it's a bit of a moving target, because it is our third fund. So first fund was about $10 million, second fund about $20 million, and the third fund is $50 million, 50. So I suppose, as the ecosystems have evolved as well, we're evolving our investment sort of thesis slightly towards ticket sizes, etc. But through the years, also, specifically in the early years, it's very difficult raising a fund. So we did also raise quite a lot of funding in SPVs with angel investors. We invested ourselves. Then we also have one or two smaller seed funds within, like for instance, our Grindstone Accelerator under Knife, in partnership with Think Room and Catherine and a few others, so officially, but that story gets complicated. So therefore, we just say, okay, fund 1, fund 2, fund 3, and other stuff of helping entrepreneurs through the process.
Beautiful. How many companies have you invested in total thus far?
Sure, I would say
more than you can count.
I'm looking at our wall there to see if I can do a quick calculation. Look, it depends. So if it's really 10 million, so let's say $1 million and above, probably around 25, 30, but if you add sort of seed funding and earlier stage businesses with smaller ticket sizes, then I suppose 50 plus type thing,
Okay. And then how many exits to this day?
So, successful exits, probably about 12 to 15, really good ones. And then the others, in VC, if you don't hit your target returns of a couple of times money and return targets of 30% IRR plus, then we see it as a bit of a disappointing exit. But look, an exit could also be a liquidity event, a business not working, etc. So we've had all of the above. But on the whole, our funds have performed very well. We're very proud of being one of the first VC funds down this part of the world to really return our fund one totally. Exit all the businesses, create a good return to our investors, and wrap that one up totally. And then fund 2 and fund 3 are still in process of exits, but we really have learned a lot in that process. We were also a little bit lucky. I mean, luck and timing does play a role. So it's not 100%. All about us designing it, but through the years, we've had, exits to the likes of, local businesses, to the likes of Visa, to General Electric, to Uber Eats, to Garmin, to SoftBank. So we've, once you sort of go through that a few times, you learn a few new tricks about how you should invest and what tools you need at the sell side, due diligence, data room, et cetera, et cetera. So I think that is becoming a core value proposition, and we really focus on that, because ultimately, without exits, this ecosystem or any VC fund is also just kind of never really returning funding to the investor base, and then this asset class won't build any credibility.
Keet, in your experience, what would you say is one of the most difficult thing about the South African, or rather African, VC space?
Well, both of those have, obviously Africa is a big continent, so you can't generalize, but South Africa's VC space is quite nascent still, and it is difficult because we struggle with local institutional investors backing the space. Only recently, as the Mine Workers Investment Company, banks like Standard Bank, the SASME Fund, and a few came on board. And then we've got a double whammy because there's no real local institutions backing the space. And then on the other hand, the development funding institutions really see South Africa almost as too developed, so as an economy. So it's much better for them to invest in, for good reason, in East Africa or West Africa or some of those nations. So we really struggle to get capital under management. Thank goodness that the saving grace through the years has been that we built this industry on the shoulders of angel investors. Many, it's a very prolific angel investor and super angel investor economy. When it comes to sort of broader Africa, I think the difficult thing is still really exits. So the challenge is really liquidity. So what happens is, the exit optionality in emerging or first world sort of markets where this is more of a asset class that has traction, as the IPO market is prolific. So you can build a business and generally if it's big enough and big enough scale, you can take it to an IPO or an initial public offering and stuff. And in this area or this continent, most exits are trade sale to strategic. And what that basically means is, there's a bigger corporate that does an acquisition of an earlier stage business. And that's fine, that happens. But the problem there is that the M&A team of a big corporate is not going to necessarily hugely overpay for a tech business to bring that technology into the thing, unless it's very strategic and very much needed, So therefore, it's quite difficult to get these businesses. It's easy enough to get them to grow off a low base. But if the investors overpay on the way in, it's very difficult to make a return on the way out, just because it's that trade sale element. You're dealing with very clever M&A team, and they negotiate hard. Trust me.
No, definitely. Now, let's look into your performing portfolio companies. What makes them special, and what makes specifically their founders special?
Look, I think they're all special, because any entrepreneur that chooses that path or finds that path or is forced to go that path, I've got huge respect for. So I think there is something special about entrepreneurship. I don't think any more special than doctors or engineers or accountants, I suppose, because entrepreneurs are just, other job creators, I suppose, or deliver a service or a product. But I think the ones that are really, really successful have that tenacity of not giving up, and also they what gets measured gets done. So what we found the common thread between the successful businesses, the entrepreneurs who really understand the underlying unit economics and just focuses on how to build the business out of nothing, and then focus on sales, business development, unit economics, and real tangible growth, not just winning competitions and having a big PR thing that sometimes help if the underlying business is rock solid. And then to be quite honest, as with most things in life, you do need a little bit of luck and timing. If the big contract comes,
definitely,
like, if you run out of capital and there's a delay in a POC, or so you do need to meet the right people at the right time, but you need to put yourself in that position. Never give up. I always sort of say that one of Knife Capital's core differentiators is that we just sort of hung in there for 13 years now, and we probably should have given up a few times in the process. But here we are, and we got to a place where it's a really, really great business now.
100%. Keet, I want you to answer this to potential startups. Why should a startup go to Knife Capital if it fits all conditions? And has gotten a term sheet from other VCs?
Well, we can only do so many deals a year. We don't profess to be the biggest business, and we're not a volumes-driven business. So, we do encourage entrepreneurs to actually, not necessarily shop around, but make like a good partner universe of who would be a good fit as a good investor. There are some real quality VCs across the African continent and in South Africa. So we collaborate with them, we co-invest. So I don't think it's about us trying to create this moat and wrap our arms around all the entrepreneurs, because otherwise, 99% of them will never get funded. However, there's two things which we feel is a good reason for a fit, and that is if an entrepreneur truly is exit centric. So our sort of focus is exit centric business building. Some entrepreneurs just want to build, and they want some capital, and they don't want any influence along the path or any and there are some entrepreneurs where that is the better investor. So from a Knife perspective, we try and at least help influence the path towards growth or market access or exit. So if you have an exit mindset, we can use our collective experience as a team, our negotiating experience with M&A teams on the way out, and basically the partner universe building, and the what kind of champagne you need to put on ice before when you sign the exit deal. So it is a little bit focused on that. And then sort of lastly, we have a bit of a value chain approach now, where we have a accelerator, a grindstone model where earlier stage businesses can find their feet. Then we have Series A funds where we can kind of do ticket sizes of sort of $1 to $2 million. And then we have Series B and on funds where we have minimum ticket sizes of $3 million. So I think from a perspective, we can follow on and grow with the entrepreneurs, and we can add value, up and down that value stream, et cetera, et cetera. But main thing is exit. But I mean, we have had entrepreneurs that have had better terms in terms of valuation from another VC or two, but then just found a better fit. And for that matter, I would also encourage, where we are not a good fit for an entrepreneur, to not go with us. A good investment and a good business and a good fit and a good culture fit. I mean, it's a long journey, huh? It's 5 to 7 years or so before you get to an exit in this, and you are going to come across hard times, and you are going to fight, and you are going to have fun. And basically you have to do this with like-minded people that at least understand 100%. Your journey. And it's, so I think if it just depends, but I think most of our portfolio companies have had a positive thing. I mean, and we can validate that because we've reinvested with a few entrepreneurs that we've exited with. We have 15 investors in our funds, which are previous entrepreneurs that we have helped exit their businesses and make them much more rich than we are. And now they become our investors. So when I meet entrepreneurs that we're going to invest in, we always sort of have realized that the power play is a bit different. And it's not this VC on this coming down from the mountain. It's basically us looking at our future bosses. And if we do our job right, those entrepreneurs will... I'll work for them within 5 to 7 years.
So what I'm getting is one, exit mindset, and a fit for the long haul, for the journey, for the long miles ahead.
Exactly.
Keet, I need to ask this, right? What's the biggest check that Knife Capital has written?
So we about $5 million.
Okay.
And counting. So we can do check sizes to up to about $10 million technically, because that's sort of 20% of fund size. But that becomes quite risky from a portfolio construction perspective. So yeah, we will probably at this stage of our life go up to about 7.5, just from a prudency factor. But yeah, we about 5, and then but we also have, and I don't want to overcomplicate the story, but we also have within our broader team, we're backed by a family office in the UK, and within that, some of our team members are also split their time around that and here. And yeah, there we've done significantly larger private equity deals, but that's not VC anymore, which are sort of indirectly just gives us a little bit more IP and tricks and access to the right kind of lawyers and things are a bit leveled up when you do larger transactions. But yeah, we will try and stay within the $3 million, $5 million range, and for the really good companies, we'll double down and follow on into at the moment, $6, $7, $8 million.
What's Knive's aspiration for the African continent? Are you planning to move aggressively more into within Africa?
Not aggressively. I think it's quite arrogant of us to think we can do better deals in Nigeria or Kenya or Senegal or Egypt or Tunisia than those very credible funds can do. So we are moving into the rest of Africa, but in a very much a co-investment angle. I think
makes sense.
I'm personally, unless we feel because we've got a bit more of a hands-on approach. And there are different approaches of doing many deals, and many will fail and some will succeed, and you hunt one or two unicorns. We are a little bit more slow and steady around that, and very respectful of ecosystems. We would know in this South African or maybe sub-Saharan context more like which entrepreneurs to invest with, which investors to avoid. We can connect people to any corporate on the Johannesburg Stock Exchange if they so warrant to be. So we can really open doors. But can we open the same doors in other countries in Africa? Do we know the legal system and the company law off by heart? No. So I think we will co-invest with credible investors. But our real reason or purpose from a Knife perspective is to make sure the VC asset class becomes credible, and it can only really be credible with success stories, with co-investment, collaboration, and so forth. So that's our aspiration for the rest of Africa. But we are, we currently, in the next month or so, we will too, maybe if things drag on, announce a transaction out of Kenya and Rwanda. So yeah.
And iAfrikan definitely will get the exclusive on that, right?
Depends if you give me some champagne.
Don't worry, I got you, Keet. I got you. Lastly, Keet, I need to ask this. How have the changes to Section 12J tax breaks affected Knife Capital and just generally the VC investment culture in the country?
Look, it's a huge pity because Section 12J was a tax break initiative where private investors could invest in accredited VCs like a Knife Capital, a few others, and we could then use that capital more efficiently if more efficiently into startup investments. But it was sort of abused a little bit legally and a bit and SARS. Our tax authorities eventually decided, no, this is not creating enough jobs and all that. And it's a long story, but how is it affected? Look, it brought a lot of investors out of the woodwork that got exposure to the asset class. So actually, a lot of our 12J investors that came into Knife, and they are actually investing and reinvesting some of their capital behind us, even without the tax break, because now they've got a bit of a feel for the asset classes. So it's a bit demystified and that. So it did catalyze a new class of investors. But, if you back this asset class for a tax break, then you should also stay far away from this asset class, So if the value proposition doesn't make sense from a returns perspective and backing a fund manager that can deliver outsized returns, then this is not an asset class to back. It just was a sweetener, just kind of de-risked it a little bit, because think about it, the average sort of high bracket tax rate in South Africa is about 45%. And we could say to an investor, you can get, if you invest R1 million, you can get like 45% back in a VC thing in the first year of your investment. Technically, cash flow wise is what that means. So we can exit half the portfolio in year one, which doesn't matter. And that does a lot for your returns. But it is a huge pity because obviously that money flow, we constantly year on year had our reinvestment people that just reinvested. So it almost became rolling funds and easier to raise capital because the institutions are not backing. But luckily, the institutions are now starting to come into the funds, and I think it's a good. I mean, there's good and bad about 12J. On the downside for us, the only real constraint is 12J. You have to invest in South African businesses, so obviously they use South African taxpayer money essentially. And within a knowledge economy with businesses growing across border and registering in Delaware and Amsterdam, and to raise further capital and loop structures and stuff, 12J structure does have its drawbacks, So, I mean, pros and cons, but hugely a pity that structure is not available for South Africans.
Keet, thank you so much for joining iAfrikan. Thank you so much. Wishing Knife Capital. And really, this is a monumental interview in a sense that, at iAfrikan, we believe in the VC space so much, and we'd love for it to mature, grow to the heights of Europe, Americas, the Australias, and to really do what you said, spur on, entrepreneurship. And I think on a much more societal level, just help solve our problems. And we know all the problems. There's too many problems. We need the solutions. And I think you guys are adding on to that. Thank you for listening to iAfrikan Bytes. Please share your feedback with us on our socials. On Twitter at iAfrikan. On LinkedIn at iAfrikan.com. And check out our other podcasts, The Tefo Mohapi Show, Take Legal Matters, and The Lead Creator on all podcast streaming platforms. And also make sure to head over to www.iafrikan.com. That is iafrikan.com/radio, and subscribe for notifications. iAfrikan Bytes is an iAfrikan media original show. Produced by Nzalo Mbangana, content producer and host Badon Kotokwaro, and content manager Machabe Mabunda.